Where's the buzz? Randy. There he is. All right. So let's dig into this a little bit, go into our screen, and look, momentum, very positive. I spent the morning watching CNBC, so you don't have to. They had a guy on talking about Oracle and why Oracle, he had a bullish case for Oracle. And the question from Joe Kernan was, is the AI trade back on? Is the AI trade back on? But no conversation whatsoever about the underlying driver of this rebound that we have seen. Is anybody paying attention to the fact that the Federal Reserve is still engaging in repo? Did we forget that Japan pumped $134 billion into the financial system? I guess we did, and I guess we don't want to talk about it. So really all we can do is just kind of be agnostic to the news and simply follow the flows. And what are the flows telling us? Well, they're telling us that capital continuing to move in to this market. We are now at 52% of stocks under their 50-day moving average, but a lot of numbers breaking back above their 200-day moving average. And the thing that's nice to see, if you are bullish, if you are a person who wants to ride the flows to the upside, if you are a bear, my apologies to you, but you might have missed the squeeze that happened last week in the ongoing K-shaped recovery. That said, advancing 1,637, new highs, 93 against 16 on the new lows. That matters because it's all about the stocks on the edges of that bell curve. Now, could that be a fake out for today? Could this rally just completely turn around and roll back over? 100%. But right now, what we are focusing on is where momentum lies, how it continues to be very, very strong, and what our expectation should be moving forward. Look at that. I can fish out my earpiece at the exact same time while rattling on about momentum at 8:47 in the morning. Congratulations, Mom. All right, so looking across the board, what we're looking at, obviously, is where money is positioning, what the top screens will be. 8 of our sectors, 8 sectors have now moved into positive territory, and the Russell 2000 now back on that yellow territory with the figures that we've been talking about this week. We've talked about net positive intersection, net negative intersection, and that Russell at 23 on the official figures. That has roared back. The numbers in the Russell are not that bad. I mean, really, the only things that are breaking down right now are stocks like Wayfair, which should always be breaking down, in my opinion. Jefferies downgraded Wayfair to a hold from a buy, maintaining a 94 target. But, hey, if you're looking for something that can continue to weaken, and it's going to be Wayfair, NVIDIA, Sunrun, they're also in those categories. A lot of tech and industrials are bouncing back. And once again, that whole concept of the AI trade, we'll talk a little bit about that because NVIDIA is trying to get off the mat after a relatively rough period. But right now, we are positive, breakout momentum, green on the SPY, green on the NASDAQ, and continued strength, despite the fact that it was only a week and a half ago that we were deeply concerned about the plumbing in the financial sector, and it just shows you how quickly things can turn around very quickly if you're watching policy and you're watching insider buying. And we hit that bottom back on November 21st. We saw insider buying tick up. We're going to talk about that in the last 10 minutes of our conversation today to showcase kind of what insider buying is telling us right now, especially around a company called Blue Owl, which is a private credit group that just saw a massive amount of insider buying, $200 million in stock across a ton of executives and employees. That is a positive sign, I will put it that way, into the end of the year. Every sector except consumer, defensive, tech, and utilities are under pressure, but that said, technology is coming back. That typically is one of the last laggards, and if technology turns positive, it's going to be risk on for the rest of the year. Consumer defensive is still a little bit weak. Utilities are bouncing back into yellow territory. Everything else is positive. So, this is a sharp contrast from where we were November 21st, and it just showcases that you got to be willing to drop your thesis and pivot when necessary. All right, so at the top of this, because once again, I will remind everybody that the economy is not the stock market, and the stock market is not the economy. So I don't really know if I can remember a period of time going back to around 2017. But let's just focus post-COVID. I don't have a real period of time where I have looked at the equity market and said, oh, stocks are moving lower because the markets anticipate weakness in the economy. Again, I continue to argue and advocate that this is all about plumbing, that this is all a matter of leverage and what is happening with repo markets and what's happening with treasury debt and what the Fed is doing. So the fact that we have this economic stress, it's been 17 years since we have had a real recession. And the idea that we are suddenly going to shake off that, Fed put idea, the idea that the central bank is not going to come into the rescue, is going to be very, very difficult psychologically for this market that has relied on cheap money and changes to policy over and over and over again. That said, it's not going to change the fact that the underlying U.S. economy is under significant stress. Layoff wave signaling that stress. As I've said, the top 10% of Americans are about 49% of consumer spending. Where this economy really starts to face a crack and where the market can face a crack is if that top decile, that group that's in like the 10th percentile, the 9th percentile, the 8th percentile, they stop spending. And then it becomes a challenge of, are we willing to have an economy where 6 to 7% of Americans are responsible for 50% of consumer spending? That's a problem. Now, right now, the job cuts are significant, but as we continue to note, the government continues to borrow at a breakneck pace, and all of that cash that is ultimately finding its way through the system into bank reserves ultimately ends up in the consumer economy. Now, that said, 1.17 million job layoffs, right? That is a 54% increase from year over year, and hiring plans are collapsing across all sectors. That ADP report the other day was a big wake-up call, but the market didn't go down because, again, the market is not the economy, and the economy is not the market. Labor stress weakens consumer spending and earnings expectations, but again, it still operates on the expectation that earnings are what are driving this market. And as I've continued to advocate and argue, the Treasury and the Fed have had a bigger impact than consumer spending itself. Now, that said, you have to look at how much the government is as a percentage of GDP. And I believe 2 years ago, we were in the mid-40s, which is French level spending. So the question is that where is the spending slowdown going to come? We're going to be paying very close attention, obviously, to Black Friday numbers. We'll also be paying a lot of attention to what is happening with these cyclicals. If the consumer cyclicals and the defensives start to break down, that is a signal for Q1 problems. But again, we will be very, very cautious and continue to just note, we got to follow flows, we got to follow momentum. And until that thesis goes away, I'm going to continue to stick with that process. BlackRock doing what BlackRock does. BlackRock would love to tokenize everything, because why wouldn't they? And that will be the permissionism of the future, where you will ask BlackRock for permission to invest in things on their token chains and blockchain. Fantastic. Can't wait for that. It's going to be a moment in time where I'm just screaming up into the sky at the satellites, turn my machine back on. Let me buy some real estate in New York through your platform, BlackRock. Well, that's exactly where we're heading. But anyway, BlackRock outlook, AI remains the core investment theme, because what else is it going to be, right? What else are we going to throw our hat upon for the next few years? Now, I continue to argue and advocate that the real theme is going to come down to, honestly, whoever is the Federal Reserve Chairman. If it is Hassett, then it will be a shift away from just AI. AI is the mercantilist kind of country-centric investment, which will get a lot of capital, but it will be mining, it will be energy, it'll be pipelines, it'll be a rebuild of infrastructure. And it's interesting that they're saying AI will dominate 2026, but with high volatility, when Larry Fink's own investor letter said that the real thesis was $68 trillion in infrastructure that can be built across all parts of this country. Now, that said, capital expenditure for AI infrastructure is expected to rise. The question is, when does that hit the wall? And when that hits the wall, that's where that valuation compression can build. That is what we'll be looking for on the concerns around refinancing all of this debt globally, but really here in the United States from the post-COVID years. One of the reasons why they want to get interest rates lower, trillions of dollars that was borrowed at basically 0% after COVID, and now all of that debt has to be refinanced, which is very critical. Is that the Federal Reserve and the NEBR have the job of stopping recessions from happening? They shouldn't, because a recession is a healthy part of an economic cycle, but as we know, it is not politically popular. So politically popular, everybody wants to be in tune ahead of the midterm elections, and that's the problem. Nobody's on the same page for how do we create a long-term sustainable economy. I don't even know how a long-term sustainable economy works anymore, let alone the U.S. economy. All right, AI trades remain high probability but high volatility. So once again, you're watching the mags and you're watching the FNGD, everybody, right? Because when the FNGD breaks above that 50-day moving average, that is where we have seen deep problems in the Magnificent Seven stocks, concerns around leverage, and that's just the kind of the short-term spasm that we just had. We got above that level, then again, 21st, Japan steps in, massive stimulus, insider buying picked up, markets have recovered since then. Same thing happened here. Insider buying picks up around the 8th. This is when everybody was talking about the Great Depression, by the way. April 7th, insiders bought April 8th. Policy change 8th and the 9th, and the market took off. This was liquidity, and this was the crash of the Nikkei that happened last year that we don't talk about. So, once again, all eyes on Japan. It will be very, very critical that we keep an eye on this. We'll be talking about it way too much. Hope you have learned your Japanese. Bond markets are under pressure. Long-duration treasuries are facing renewed selling. BlackRock is bearish on long bonds due to the AI-driven refinancing demand. And remember, you'll hear this term financing. The reality is that 7 out of 8 or 6 out of 7, every new dollar that is created is utilized for the purposes of refinancing, not actually financing growth. That's according to Cross-Border Capital. And that speaks to the trap that we have created for ourselves going back to 2008. We just have never dealt with this. How often do we see wide-scale bankruptcies? We don't, because everybody is a counterparty, and that can lead to a major freeze-up in financial systems. In 2020, Fed stepped in. 2018, Fed stepped in. 2022, Britain stepped in. Now Japan just stepped in. Bailouts, bailouts, bailouts. The purpose of a market is to sell, but the purpose of a system, a financial system, should be judged by its outcomes. And its outcomes are perpetual bailouts because they are deathly afraid of debt deflation spirals. Bond stress will spill into equities, credit spreads, and volatility. Remember, if you go back to 2023, when the 10-year bond hit 5%, how badly the market did in the last 2 months of that year. I'm not predicting 5% for the 10-year bond, but I will just simply note higher bond yields lead to a reduction in collateral quality, making it more difficult to rehypothecate based on the collateral quality, and that impacts everything across the board. It is a refinancing system. It is not a financing system. Finally, before we get to the runner, commodities. All right, look, it has been very, very difficult for traders to take a lot of faith in the volatility and the price movement in things like gold and silver and copper and everything else. And I just want to remind you, you just keep it simple, okay? Look at the OILU. When the OILU breaks above its 8, 20, 50, 100-day moving averages, just be short duration long on some of these names. It's not going to be a violent move to the upside on the EMP space. But if you look at where this moved, right, on the 28th, look at Apache, APA. On the 28th, stock has gone from 25 to 27. Short duration options on names like this, it's like 40 cents in the next week. So this thing, basically a $25 call, probably went up somewhere in the range of 200 to 400%. Just use the OIOU as a guide. Now, what we're going to be doing now is looking for overbought on some of these commodities, but the story is still here. Energy and commodity names are getting a bid on supply risk concerns. Chatter, obviously, around the United States, trying to find some pathway between Ukraine. There is a lot of geopolitical risk that is happening. And even though we're getting toward overbought territory on some of the E&P stocks, the reality is, like, Venezuela could be an issue tomorrow. We're talking about airstrikes. We have situations with Iran and the Strait of Hormuz, and, of course, Ukraine and Russia. So right now, there's a lot of focus. There's a lot of rotation into materials, energy, and metals. We talked about the XLB the very next day, the 24th. That was one of the very first sectors that went positive. It has done very, very well since. Materials have done well. Gold has done well, and now energy is catching up as well. SPY 7,000 by end of year, much less than that in 2026 is David's prediction. Again, I'm not going to be stunned if we hit 7,100, and I think it would be a perfect ending to this year after it hit if it were to hit all 5 of my price targets based on different expectations for the year, which would just be kind of funny. Which means I better write my outlook for 2026. All right. Where are you, Secret Agent Charlie? He knows. All right. I'm going to start here. Long. Okay. I'm going to talk about this in a moment, but OWL. This is going to be a little bit tricky. I'm just going to warn you, largely because this has been one of those names that Blue Owl, I own this, by the way, and I've owned it through all of this chaos. I've owned it back at 20, and I'm going to stick with it because it's in my speculative bucket, largely because I am a firm believer in the financing of what is necessary in the AI energy infrastructure space. That said, they got in some trouble. They got beaten up pretty bad on the backside of concerns around their data center funding and their private credit already. And I don't like these profiles in Barron's and the Wall Street Journal when people are saying, hey, everything's fine. But I will note this. Blue Owl executives just bought stock despite the fact that we just had all of these deep concerns. And this is a sizable amount of insider buying, like cartoonish. The kind of insider buying from a cluster perspective that really captures my imagination and my attention, because either all of these guys are doing something and trying to cover their tracks, and I'm not going to make that accusation, or they basically are saying, hey, the worst is over, and we're putting our own money on the line on this. This is the first insider buying at OWL since 2022. $7.5 million, but another massive stake done by employees. $2.3 million by the co-CEO, $1.8 million by the co-president, $2.3 by the other CEO, and the CFO buying $500,000. Okay, so what's interesting about this is the fact that, look, we had a pop yesterday. Certainly markets figured out pretty quickly that the insiders were buying the stock because we started to see that bidding on the 3rd. It comes in at 5 o'clock. But let me just tell you something. People figure this out, and it ultimately ends with a lot of strength. So here's the thing. I'm going to buy a tranche of this stock, and I'm going to buy it at about $15.98. And my stop for this new tranche is going to be probably back here at the $15 level, right at the 20-day, just in case this isn't a fake out. The other thing to potentially do is to do a spread. Now, the problem with this is that we're up 2% this morning. We've had a 32% move. But what I typically advocate when I see this type of insider buying, and we're in positive momentum right now, is the idea of selling to the downside and selling lower than where the executives bought the stock. So in that case, I'm selling puts at 15 and buying at 14, or going down to 14.50 and buying at 13.50. And then if it pulls back, I just buy the contracts back, and then that's one way to take a little bit of a small loss, but not really truly setting myself up for failure. These are those moments that I know that it's easy to look at this with a lot of skepticism, because one of the major lessons of the 2023 Silicon Valley banking crisis was the idea that you would look at all of the insider buying that had transacted during that period, and you go, there's no way. Like, Zion's going to go down. Western Alliance is going to go down. All of these banks are going to go down. They're going to go down. They're going to go down. And they don't. They actually rally back. WAL, Western Alliance Bank Corp, is a good example of this. This was a bank that was supposed to be dead. And it didn't die. It went from freaking 7 to 50 in a period of 4.5 months during the Silicon Valley banking crisis. I'm not saying that this is a sustainable move, and I'm not saying that Al really deserves to be around after, if they are involved in a lot of these problems. But I will tell you this: the market's going to look at this and probably take this thing back to 18. So I'm going to take part of that for the short term, and I'm going to go from there. If you have volume, if you can find volume, or you can set the spread up, you can. That's one thing that you could potentially do, is just simply go in and try to set it up. Go in and say, all right, I'm going to sell at this level, at this level in the middle, and then buy at that, and then just see if it fills. Otherwise, buy the stock and try to ride the momentum. A move back to $17 seems to be in the play. Don's talking about Meta. Yeesh. That's a good one. Look at that. What do they do now? Opens a formal antitrust investigation into WhatsApp AI tools over. I'm telling you, I'm telling you, the EU wants to shut WhatsApp down. And then they want to charge you for long distance phone calls. There you go. 10% of global revenue. Yikes. Over competition concerns. Yeah, that's what it is. Is it the fact that it's that you can make a phone call for free to Europe? Is that what offends you? Idiots. Sale. Anti-competition. They're going to get real upset if somebody ever creates an energy source that's free. Oh, we're going to put all of our oil industry business at it. Who cares? You stink. I'm in a mood. All right, let's do it. Sale. Don't know what you do. What is this company? Is this a payment company? Am I going to get upset about it? SailPoint. 3,000 employees in Austin, Texas. Still don't know what they do. And I'm going to find it out myself. Don't ruin it for me. Don't tell me. I need to find out by myself. Identity governance and administration. I have no idea what this company does. Agent identity security, expanding its addressable. This sounds something. Contextual intelligence for tiered pricing model. Again, this is all MBA speak that doesn't make any sense to me. Let's just look at the underlying quant side. Wow. Buy. Wall Street analyst. Buy. Don't know what you do. Buy. Same thing here. I'm looking for this 8-day moving average to cross above this 20-day, and if I can get to that, then I'm buying. I'm going to wait on this for a couple days, but hey, we've seen some of these kind of sweeping momentum moves that have happened. Stock does pretty well when the 8 crosses over the 20, so add it to your list, and if we get there, hey, look for a move like this, look for a move like this, look for a move, a couple of bucks. Sale, technology, software, infrastructure. Couldn't tell you what any of that means. Don't care. Just care about the price. Follow the momentum. EOSE. Industrial name. And I don't like this chart whatsoever. Anything exciting happen on the weekly? I mean, that's a good-looking move, but now it's just getting beaten up. Let me see what all of the Wall Street nerds have said about this. They are bullish. Of course they are. Horrible profitability, terrible revisions, completely unprofitable company with a 68 years of revenue figure. I'm out. So Sale and Blue Owl are my two positives. Constellation Energy to the downside. Apparently, people aren't drinking during the holidays. I'm on that bandwagon. Ugh. Get to hang out with my family sober. Oof. All right. Consumer Defensive continuing to break down. Look, I'm going to continue to look for a breakdown on this stock, looking for it to break under the hourly, 20 hourly with a move down. Where is my move on this? Down into like the 127 level. STZ, not a whole lot of enthusiasm for Corona Light. Is that Corona Light? Probably. Markets drunk on AI leave alcohol giant at pandemic level lows. There's a reason for that, analyst. Wow, that's terrible. You know what I'm going to do? I'm not going to do anything. I'm going to wait until somebody like Buffett comes in and starts buying the alcohol stocks again. HCA, which continues to be under pressure. A lot of questions, obviously, building around what's going to happen with Obamacare. Well, here's your line in the sand, 586. If we break under that, you've got to move down to 460. Spreads are your friend. Buying at the 490 level, maybe selling at the 470 level. And AAOI, I don't know what that is. Sounds like a combination of AI and Alcoholics Anonymous, which would be fine. That's where we're heading anyway. 2452, more technology. God, this is awful. Where do we even find these companies? AAIOI is at risk of performing badly. B. Riley downgrades rating to sell. First off, B. Riley is downgrading this company after B. Riley has been doing what B. Riley does. So if B. Riley doesn't like a stock, you know it's bad. $20 downside.
That is funny.
Somebody's here. Somebody's talking. I can hear somebody in the background.
That was me. My mic was too far away. I was just saying that is hilarious.
Don't
B.
do
Riley
that.
downgrading people.
All right. Thank you, Oz. All right. Your stock list for today, Path, Tesla, 5. These are just names that are popping and bouncing around. So once again, 5 below. I don't understand how this is a stock and a company, but hey, net sales up 23%. And if you need something for $5, go to 5 below and pay $20 for it. It's like the dollar store, but it's worse. You want an inflatable giraffe? They got one. You want to buy a knockoff twister board for $6? They got it. This section has been brought to you by 5 Below, where you can pay more than $5. All right, on top of that, Tesla. I mean, look, this is a Gianni stock, and he's just like, yeah, it's going to go to 7,000. He's probably right. Trump terminating the CAFE standards, cutting the 2031 target to 35.40. Hey, this doesn't matter because as we have discussed, and we talked about it at Tesla 4D, and we talked about it elsewhere, Tesla's not going to be a car company anymore. Doesn't matter. It's an energy company. It's an AI company. Remember, they pivoted, and they told everybody about it. Company's still going to be heavily focused on robo-taxis, and they've got such an absolute massive strategic advantage against all of the traditional automakers. Waymo really is their competitor, but Waymo had an incident with a dog, so that's probably going to only help Tesla as well. That said, 449, looking for a continuation, move up to around 470. You don't have to just trade Tesla. You can trade the TSLL, which is the double bull, and you trade this with volume weighted average price. I got to wrap this up because I got to get over to what the last point was. What are the insiders telling us? Well, I'm going to go back and I want to point something out. And a lot of people are going to sit here and they're going to say, we didn't trust this rally. We didn't trust this move. We didn't trust the pop in the S&P 500 that has transpired. And I'm going to tell you, as an investor, I agree with you. I agree with you that the recent moves in this market are questionable. Japan having to step in, I still think that that's a serious problem. And the fact that Japan is engaging in stimulus at a time, keep this in mind, keep it in mind that their inflation levels are the highest that they have been in a very long time. They're going to have to raise interest rates, which is going to impact everything. All quality. They have been the money printer for the financial markets for decades. And again, the carry trade is pretty simple. Borrow in cheap yen, convert it into something else, pay 1% interest over there, and pocket the 15% gains that you were making in U.S. equities. But now that may change, and the question is, how much does this unwind and how much money leaves? That 19% of the U.S. market that is owned by foreign investors, what percentage of that leaves? We don't know. But it's the big macro question. It's the big mystery of 2026. And if foreign investors say, you know what, we're out, that can lead to valuation contraction. That can lead to having funds and ETFs having to dump big stocks. That leads to the deleveraging of positions. And don't act like this hasn't happened before, because it happened in 2008. When liquidity dries up in the United States and liquidity dries up in China at the exact same time, that's how you end up with an '08 moment. Oh, and by the way, do you want to know what the big catalyst was that really set a lot of stuff off in 2008 that a lot of people don't know about? China shut down its manufacturing before the Olympics in Beijing. That, in early 2008, created problems in the global plumbing of the markets, and money had to leave the U.S. Very interesting thing that people don't think about, because nobody talks about this stuff because it's too complex. So let's just say the AI trade is back on, everybody. All right, so key thing that I want to focus on is, I don't care if you don't think that this is a sustainable rally, but I would like just a little bit, not much, just a tad, just a little bit of credit, because all signs have pointed to, when this blue line moves up, let's go back 6 months. When this blue line picks up, those short-term declines in the S&P 500, which is this red line, blue line, red line, blue line, red line, red line, blue, like when it goes up, that is executives putting their own money down on their own stocks. And by the way, it tends to be some level of accommodation. Insider buying right there, right there. I know it doesn't look significant, but it was the biggest pop since April. And by the way, the largest pop since April was where we called the bottom on Liberation Day. And this was our money market spasm. So I'm going to tell you, and I agree with Blake, by the way. Blake said, hey, are we down on the quarter? Yeah. So tax harvesting comes into play. Don't be shocked if we see a little bit of a money market spasm toward the end of the year, but then don't be shocked to see the insiders step back in and buy at the end of the year. You see a rotation. That insider buying, that it's very subtle, but it's right there in the chart. That, combined with the policy of Japan, has helped set all of this off. And by the way, the ongoing support from the Fed in the repo markets, the plumbing of the system has been fixed. And it's no shock that when the plumbing changes and the policies are accommodative, the insiders buy, because they've called the bottom of every single market downturn since 2008. And in some cases, really, that period in 06. If you want to count it, I really don't. I view the lens of the world through the plumbing after the Lehman Brothers collapse. That's ECB. That right there is the China crisis that happened in early 2016 when the S&P 500 fell 20% in a month. There's your repo. No, not repo. That's Volmageddon into the pivot of Powell when we went into QE4. That's, of course, what happened with COVID. And then you've had all these little tinier spikes. Well, here's the problem. These things are getting more common. That's why these spikes are smaller, but they're more frequent. It used to be we'd have a liquidity event every like 3-4 years, and that would be the bottom. Well, now we're having an event, 4 Sigma event, every single year. And we've had one every year since 2020. So when I tell you, hey, the insiders are picking up, it's bullish. And once again, if you're focusing on insiders and you're looking at all of this cluster buying, and these are the biggest purchases in the last 10 days, then yeah, I'm going to give it a shot with Al. I'm going to look to try to figure out a way that I can sell a spread if I can. And I'm just going to run this momentum. And I will remind you once again, last thing I'm going to say before Don comes in. When the United States and when Japan, Western central banks, and yes, Japan is considered a Western central bank, part of the G7, but also consider this. They operate to accommodate what is happening within the dollar world. When the United States and Japan and all of these other central banks engage in quantitative easing and stimulus, it's bullish for financials, real estate, insurance, financials. When Japan does this, it's bullish for banking and finance and FIRE. Same thing with the U.S., same thing with Canada, Bank of England, EU. When China does it, it's bullish for commodities because China is a manufacturing economy, and the United States and all the G7, we are a financialized one. We engage in paper trading while the rest of the world is engaged in hard commodities. It is 9:21. That means I got to get out of here. I have to go. So I'm gonna scram. I hope everybody has a great day. Good catching up with everybody. Mark, I hope you have a good day, Jose, and of course everybody else. I'll be back at 3 o'clock today. We'll dig a little bit deeper into insider buying and some of the other major trends in this market. Don's going to be here from at 9:30 to take you through the opening bell and the first hour. If you are not a member of TheoTrade, I don't know what you're doing. Click the link, name your price, and check it out. Spend a day with us and understand, like, if you're trying to position yourself for the rest of this year, now is the time to do it because this is going to be a fascinating next 3 weeks of trading. Have a great day, everybody. Market, Don's going to be here from